Hey everyone, welcome back. NIO closed Monday up 1.45% at $4.91, and it looks like we're edging closer to retesting that $5 mark. Now, $5 might just be a round number, but in trading psychology, these levels often act as magnets, and breaking through can change the momentum. What's interesting here is that today's move didn't come off the back of some big flashy headline. There was no surprise earnings beat, no sudden government subsidy announcement, no shocking delivery update. Instead, this was a quiet grind higher, and sometimes that kind of movement says more than a one-day spike. It's the market slowly building a case in the background. So, in this update, I want to break down where that underlying strength might be coming from, what the technical picture looks like, and, most importantly, why battery swap economics and a product shift with the Onvo L90 could be setting up a more compelling story into the back half of the year. We didn't get any official corporate news releases today. No major macro shockers either. China's EV policy landscape remains largely unchanged over the past week, and global markets were fairly steady. That means this bump likely comes from ongoing confidence building among investors, rather than a knee-jerk reaction to a headline. But dig a little deeper and there are threads to pull. Over the past few weeks, NIO has been quietly pushing some very strong operational data. Most notably, they've now surpassed 80 million cumulative battery swaps, and are running at around 97,000 swaps per day. That's roughly one swap every 0.88 seconds, literally happening continuously around the clock. For context, when the network was first launched, critics weren't sure if people would actually adopt it at scale. Fast forward to now, and it's become a core part of the NIO ecosystem. So much so that for many drivers, swapping isn't just a convenience, it's the preferred way to refuel their car. Here's where it gets interesting for us as investors. The business model behind these swap stations is starting to make financial sense. Analysts have estimated that a typical station can break even at around 60 to 70 swaps per day. When you're running at 97,000 swaps across the network, you can safely assume that a good chunk of those stations, especially in major cities like Shanghai, are hitting or exceeding that break-even threshold. That's a big shift. In the early days, this infrastructure was a heavy cost center. You had to build it, maintain it, staff it. It was capital-intensive and nowhere near profitable. But when those economics flip, the infrastructure starts generating cash instead of burning it. And that can have a meaningful impact on margins, especially as the network scales further. This is one of those under-the-radar transitions that Wall Street sometimes misses until it's staring them in the face in an earnings report. If you can start showing that a big fixed-cost project is turning into a revenue-generating machine, you're not just improving the bottom line, you're strengthening your moat. Strategically, battery swapping is still something that really differentiates NIO from other EV players. Tesla's bet is on its supercharger network, and most others are going for traditional fast DC charging. Swapping is faster than either. Roll in, get a fresh battery, roll out in a few minutes. And because the battery is owned by NIO in many cases, they can manage battery health, upgrades, and recycling in-house. That means more control over quality, potentially lower warranty costs, and the ability to keep customers tied into the ecosystem. This isn't just a feature, it's part of the brand's identity. And as the economics improve, it becomes a competitive advantage that's harder for rivals to copy without massive investment. While battery swapping is the here-and-now operational story, there's also a product story taking shape that could matter a lot for profitability. CEO William Li has been pretty clear that the Onvo L90, which targets a different segment of the market, is expected to start boosting overall profitability by Q4 of 2025. That's a big deal because, historically, NIO's lineup has skewed toward the premium end of the EV spectrum. The L90 opens up a broader customer base without diluting the brand's tech advantages. If they can pull off volume sales in that segment while keeping infrastructure usage high, you've got a scenario where both top-line revenue and margin expansion could happen in tandem. From a chart perspective, $5 is the near-term battleground. We've been hovering just below it for a while, and every time we test it, traders are watching closely. A clean break above $5, with decent volume, could open the door to a push toward the $5.30 to $5.50 range in the short term. Equally important, $4.80 has emerged as a kind of informal support zone. That's where buyers seem willing to step in. As long as we're holding above there, the technical structure remains constructive. Even though today's move wasn't sparked by macro news, it's worth noting that the broader EV sector has been relatively supportive lately. XPeng and Li Auto have both had moments of positive momentum recently, partly thanks to delivery updates and partly on the back of sector sentiment improving. Sometimes that rising tide effect benefits NIO even if their own news flow is quiet. Globally, EV adoption curves are still pointing upward, and Chinese EV makers are increasingly looking at international markets. While NIO's expansion outside of China is still in early stages, the brand recognition they're building could pay dividends later, especially if battery swapping proves attractive in markets with less charging infrastructure. So, where does this leave us heading into the next few weeks? For short-term traders, the $5 breakout test is the immediate storyline. That's the headline you're going to see if we push through. NIO breaks $5 resistance, and that can draw in momentum players. For medium to long-term investors, the real focus should be on two metrics: swap station profitability and Onvo L90 ramp-up. If NIO can demonstrate in Q3 and Q4 that infrastructure is cash positive and the product lineup is diversifying in a profitable way, the narrative changes from EV maker fighting for relevance to EV maker with a sustainable, differentiated model. And that's a narrative that tends to attract a different caliber of investor: less short-term trading, more long-term capital. So, yes, today's 1.45% gain to $4.91 might seem small in isolation. But sometimes the quieter days tell you the market is willing to accumulate stock without needing a breaking news hook. Combine that with improving infrastructure economics, a potentially market-expanding product in the Onvo L90, and a technical picture that's flirting with a key breakout level, and you've got a measured, but still bullish setup. This isn't about hyping up a moonshot overnight. It's about recognizing when the fundamentals, the technicals, and the strategies start pointing in the same direction. And right now, for NIO, that direction looks cautiously upward. If you're trading it, watch the $5 level closely. If you're investing, keep your eyes on the battery swap usage numbers and the progress toward Q4 profitability. And as always, make sure any position size fits your risk tolerance, because as much as I like the setup, this is still an EV stock, and volatility comes with the territory. That's it for this update. If you found it useful, hit the like button, subscribe for more market breakdowns, and let me know in the comments: do you think NIO can hold above $5 once it breaks, or is it going to get smacked back down into the $4s? I'll see you in the next one.